IT stocks are moving to the high point of the day. So Tech Mahindra is now up 1%. TCS is green, going for itself. TCS up 0.4%. So IT is reversing some of its earlier weakness. Let's get to our special segment, Finstreet, where Abhishek takes a deep dive into the exceptional loan growth for the banking sector in FY23.
Well, in Finstreet today, let's focus on the loan growth, which has been phenomenally strong for the banking sector in FY23. So, for the period ending 27 Jan 2023, overall credit growth was at 16.3% YOY and non-food credit growth was 16.7% YOY. Let's take a deep dive into what has driven the loan growth and how it will pan out going ahead. Incremental loan growth on the non-food credit side for FY23 till now has been rupees 14.6 lakh crore. So, in FY23, monthly credit demand up to Jan 23 has been at rupees 1.46 lakh crore, which is much higher than the previous best, which was recorded in FY20 of about rupees 1.4 lakh crore, and it is one of the best in many years. Which sector has driven the loan growth? Personal loans, which includes home loans as well, has been one of the biggest drivers of loan growth in FY23 so far. Services has been the next best segment to witness strong loan growth momentum. It formed around 31.5% of the incremental loans in the system up to Jan 2023. Agriculture formed around 12.1% of the incremental loans, with industry forming around 9.5% of the incremental loans. Talking about the best performing segment, personal loans, of the incremental loan growth of rupees 5.7 lakh crore in personal loans, 35.55% has been driven by the housing sector, which includes priority sector lending as well. And the second large part was from the other personal loans, which contributed 30% of the incremental personal loans. Vehicle loans and credit cards have done well too. Credit card performance in FY23 so far has been one of the best in the history for the banking sector with respect to outstanding loans, card issuances, as well as massive increase in ticket sizes. So, services sector performance has been strong too. NBFCs switched to banks from money market as liquidity dried up and money market rates shot up. So, trade also formed a substantial portion of the incremental growth in services segment. Shipping witnessed a decline in terms of incremental loan flows. Let's take a look at the outlook. Now, loan growth rate will soften a bit going ahead. Some part of the loan growth has been derived from lower principal repayment. Hence, when the repayment in principal starts to happen in the EMI, it starts to increase. We may see some impact on the loan growth as well. Now, capex demand is yet to come back. It may not come back in a high inflation scenario. Corporate loans may continue to see working capital demand from the lenders due to better rates than money market instruments. We can expect personal loans to continue driving the overall loan growth momentum. NBFC demand will remain healthy due to favorable interest rates from banks than other instruments.
All right, Abhishek, thanks a lot for getting us that complete roundup of what we've seen as far as the loan growth goes for these big banks. But with that, we do need to get into a short break on the show. You don't go anywhere because there's lots more market action coming up for you in just a bit.